8 assets that make people rich and never work again: financial freedom, passive income, and cash flow. For everyone wanting financial independence and control over their life, financial freedom is the ultimate objective. It involves more than just possessing a sizable money account. It involves the ability to live your life as you choose. Imagine a life where you don't wake up in the morning worrying about how you'll pay your bills or being confined to a regular job that leaves you little time for the activities you enjoy. Financial freedom can only be attained when you have several passive income streams that help you get rich enough so that you don't have to work anymore. Getting rich is something beyond becoming financially independent. Do you know there are 8 assets that will make you insanely rich? Want to know about these assets? If yes, then stay with us until the end of the video. Without any further ado, let's jump right into it. The number 1 asset on our list is real estate. A wealth-building asset that has produced millionaires and billionaires throughout the years, real estate is time-tested and effective. One of the most alluring methods to obtain financial freedom is through the ownership and investment of real estate, which may generate a consistent flow of passive income. Rental properties are where real estate's magic is. When you own a rental property, you take on the role of a landlord, and your source of revenue is your renters. They pay you rent each month, which can pay for your mortgage, property taxes, and other costs, leaving you with extra money that you might invest or use for personal purposes. The lifeblood of real estate investing, this cash flow is like having a money-making machine that keeps on working for you. Real estate is also exceptional in its capacity to increase in value over time. Long-term property price trends historically indicate an increase in value, which indicates that your initial investment may increase significantly over time. As a result of this equity-building appreciation, you can use your home as collateral for upcoming investments or other financial objectives. Real estate is also a valuable asset that has inherent value. Real estate tends to be more stable and tangible than volatile investments like stocks or cryptocurrencies. Real estate is a necessary and timeless asset class since people will always need a place to live, work, or do business. While investing in real estate can be a tremendous way to grow wealth, it's important to do your homework and exercise caution. Your investment success can be strongly impacted by a number of factors, including location, market trends, property quality, and rental demand. Landlord duties include managing tenant relations and keeping the property in good condition. Stocks that pay dividends. Stocks that pay dividends are a great resource for investors looking for a steady stream of passive income. You essentially become a part owner of a dividend-paying corporation when you purchase shares of it. You have a right to a piece of the company's profits, which are paid out to shareholders in the form of dividends. The power of dividend stocks rests in the fact that they offer a consistent income stream, frequently distributed on a quarterly basis. It's like getting paid while you're sleeping. This consistent cash flow, which many investors can use to augment other sources of income and advance their financial objectives, can be a crucial part of their financial strategy. The power of compounding is one of dividend investing's most alluring features. Consider reinvesting your dividends into the same business or other dividend-paying companies rather than spending them. Reinvesting dividends allows you to purchase more shares, which in turn will result in future dividend growth. This compounding impact has the potential to greatly increase your overall wealth over time. Additionally, dividend-paying companies provide a degree of market stability and toughness. Companies with a history of dividend payments are frequently well-established, financially stable, and successful. Dividend stocks are a more dependable option for investors seeking long-term growth and income because these businesses often weather economic downturns better than non-dividend paying ones. But it's crucial to approach dividend investing cautiously. Not all firms that pay dividends are created equally, and not all high-yield dividends are long-term. Researching and selecting businesses with a track record of reliable dividend payments and strong financials is essential. Risk can be decreased by diversifying your portfolio across several companies and sectors. High-interest savings accounts and CDs. High-interest saving accounts and certificates of deposit are appealing options for investors who are risk-averse or who want to protect their wealth. These options provide a safe and reliable way to grow your money, even while the returns could not compare to the potential gains of other assets like stocks or real estate. Traditional savings accounts often have lower interest rates than high-interest accounts, which prevents your money from compounding as much. They are a dependable solution for emergency cash or short-term financial objectives because they are simple to access and have minimal or no costs. Contrarily, CDs offer a fixed interest rate over a set period of time, which can be anywhere between a few months and several years. If your financial goals have a deadline in mind, this predictability may be advantageous. A further measure of security is provided by the government's insurance of CDs up to certain limitations. High-interest savings accounts and certificates of deposit may not offer the same thrills as riskier investments, but they do offer security and stability, particularly in difficult economic times. Consider them as an important part of your overall financial plan, working in conjunction with higher-risk assets to build a portfolio that is well-balanced and diverse. Number 4, lending between individuals. Peer-to-peer lending has developed into a cutting-edge and creative asset class, providing investors with a special chance to make lucrative returns by making direct loans to people or small businesses via internet platforms. Lenders serve as the source of capital, and borrowers gradually recoup the principal plus interest. P2P lending is attractive because it offers a chance to earn greater interest rates than traditional savings accounts or bonds. Because it works outside of the conventional banking system, both lenders and borrowers can get better conditions. Before getting started with P2P lending, you should exercise prudence and do your homework. It involves some risk, just like any investment does. There is a risk of capital loss if borrowers default on their loans. Diversify your investments among several loans to reduce risk and thoroughly evaluate the creditworthiness of the borrowers. P2P lending offers a passive income source with relatively low entry hurdles, making it an interesting addition to your financial portfolio. But keep in mind that although being more recent and exciting, responsible risk-taking is still essential for the expansion of P2P lending and investment. Number 5, index funds and ETFs. A key tactic for reducing risk and attaining long-term financial success is to diversify one's investment portfolio. Exchange-traded funds and index funds have become popular and useful methods for achieving this objective. These funds invest in a broad range of businesses, industries, or even entire markets by pooling the money of numerous investors. By investing in index funds or ETFs, you get exposure to a wide variety of assets, which spreads risk and lessens the effects of swings in certain stocks or industries. With this diversification, you can protect your portfolio from the negative consequences of a single underperforming company. Number 6, own your own business and be your own boss. Are you prepared to control your future? Think about launching your own company. When you run a business, you can make all the decisions, be your own boss, and create your own brand. Successful enterprises can develop into large assets that create passive income for years to come, even if they involve a lot of early labor and dedication. Number 7, intellectual property and royalties, the value of creativity. Have you ever considered the potential value of creative works? From their works, musicians, artists, and writers can make royalties. Even intellectual property rights and patents can generate reliable revenue sources. So why not make your secret ability or fantastic idea into a resource that never runs out? Number 8, cryptocurrency. Without considering cryptocurrency, no conversation about contemporary assets is complete. Some investors have seen astounding profits by hanging on to digital currencies for the long term, despite the additional risk and volatility they carry. Just keep in mind to research thoroughly and spend sensibly. Which one of these assets seems best for you? Let us know in the comments section below. If you enjoyed watching the video, don't forget to like, subscribe, and share. See you soon in the next video.